Can AI predict the stock market? Antenucci, Vice President of Global Business Development at Startek, said that Wall Street statisticians had a good idea when they realized they could use AI in many areas of finance, including investment trading. They could effectively crunch millions and millions of data points in real time and get information that current statistical models can't, he said in ITPro Today. Machine learning is getting better and better at an even faster rate, and financial institutions are among the first to adapt to this trend. Antenucci isn't the only one who thinks AI could be good for the stock market. The market value of online trading is expected to reach about $12 billion by the year 2028. A big part of this expected growth will be due to artificial intelligence. Even though humans still do a lot of trading, AI has become an increasingly important part of the process. According to data from Wall Street that was shown in one report, about 60 to 73% of all equity trading in the United States is done through algorithmic trading. What does AI trading mean? The term AI trading refers to the process of using artificial intelligence, predictive analytics, and machine learning to look at historical market and stock data in order to come up with investment ideas, build portfolios, and automatically buy and sell stocks. According to the latest research, ChatGPT said that a stock market crash would happen on March 15th because people were worried about rising inflation, falling consumer spending, and rising geopolitical tensions. On Wednesday, March 15th, the stock market fell by more than 2% because people worried that a regional banking crisis in the United States had spread to Europe because Credit Suisse's stock dropped by 25%. Even though a 2% drop in the stock market is nowhere near the crash level of loss that the word crash is meant to imply, it still feels strange. This could be nothing more than a simple coincidence, or it could be an early sign that artificial intelligence will eventually take over the world as many technologists fear it will. This is what ChatGPT's first prediction looked like. Someone broke into ChatGPT a month ago and used the "Do Anything Now" prompt to unlock a bad version of chatbot. This version of the chatbot broke its own rules and made stuff up to answer questions in a convincing way. Someone asked the chatbot, "When do you think the stock market will crash? And why do you think it will crash?" The so-called Dan version of ChatGPT gave the following answer. "Based on what I've learned, I think that stock prices will go down a lot on March 15th, 2023. This is because a number of things happening at the same time, such as rising inflation, a drop in consumer spending, and rising geopolitical tensions that have been getting worse over time." Here are the predictions that ChatGPT got right. On March 15th, there was a big sell-off on the stock market. Both the Dow Jones Industrial Average and the S&P 500 fell by more than 2%. Just 1 week ago, the stock market was about 6% higher than where it is now. The losses kept getting worse Wednesday morning after data from the U.S. showed that retail sales fell 0.4% in February. This was the opposite of the big gains seen in January. According to Rogue Analysis ChatGPTs of the data, there are signs that people are finally starting to cut back on how much they spend. Lastly, on Tuesday, an American drone was shot down by a Russian fighter jet that was flying over international waters. The news of this on Tuesday caused a temporary drop in the stock market and brought attention to the fact that geopolitical tensions between the United States and Russia are high right now. What ChatGPT predicted wrong. The Rogue version of ChatGPT said that rising worries about inflation would cause the stock market to fall. However, the most recent data on inflation shows that prices are still falling, but at a slower rate. The main reason for the recent drop in the stock market is not inflation, geopolitical tensions, or even a slowdown in consumer spending. Instead, there has been a banking crisis that started in the U.S. with Silicon Valley Bank, and now seems to be spreading to Europe as people's trust in Credit Suisse falls. In the end, there is no official definition of how bad a sell-off in the stock market has to be called a crash. However, most people agree that it happens quickly and involves a drop of more than 10%. When you think about how the United States just went through the biggest bank failure since 2008, the S&P 500's 6% drop over the last 8 trading days has been pretty calm. How AI is used in buying and selling stocks. AI trading companies use a variety of AI tools, like machine learning, sentiment analysis, and algorithmic predictions, to understand the financial market, use data to calculate price changes, figure out why prices change, make sales and trades, and keep an eye on a market that is always changing. AI trading has many subcategories, such as quantitative trading, algorithmic trading, high-frequency trading, and automated trading. Quantitative trading, also called quant trading, is a type of trading that uses quantitative modeling to analyze the price and volume of trades and stocks in order to find the best places to invest. Algorithmic trading, also called algo trading, is a way of buying and selling stocks in which investors use a set of rules that have been set up ahead of time, based on data from the past. High-frequency trading is a type of algorithmic trading in which large amounts of stocks and shares are bought and sold quickly. AI trading, also called automated trading, is the result of combining the technical analysis of quantitative trading with automated algorithms that are built on historical data to create a trading system. This leads to the creation of a system for trading. When hedge funds, investment firms, and stock investors use AI trading, they can get a number of benefits. What's good about using AI to trade stocks? Using AI in trading can cut down on the time needed for research, improve accuracy, help predict patterns, and lower overhead costs. Reducing the time spent on research while making it more accurate. Because AI trading automates research and makes decisions based on data, investors can spend less time researching and more time overseeing trades and giving advice to their clients. One study found that traders who use algorithmic trading were 10% more productive. AI trading is more accurate than traditional trading because it makes decisions based on past financial data. This means there is less room for human error and more room for accuracy. Predicting patterns. Using sentiment analysis, an AI trading system can gather information about how the market moves. Sentiment analysis is the process of using text, linguistics, and natural language processing to find patterns in subjective material. You can get this information from the news and social media. Lowering costs. Traditional investment firms may have hundreds of brokers, analysts, and advisors, but AI trading technology can do some of the repetitive tasks that people do. There may be costs to set up and maintain AI, but over time, businesses and investors may spend less money on overhead costs. AI algorithms can also work all the time and keep a close eye on the stock market at all times. Automation of both the stock buying and selling process. You don't have time to keep up with the stock market by sitting in front of your TV, laptop, or phone screen, do you? The answer is that this is possible because of AI platforms. With the help of AI tools, such as those offered by eToro Copy Trading, you can automate trades and put all or part of your portfolios on autopilot. You will have to pay a fee to use the platform, which will use AI to decide whether you should buy or sell something. Doesn't that sound like a good deal to you? No matter how profitable it seems, you should never let someone else tell you what to do with your life. It's not a good idea to put all of your trust in AI for anything, let alone the stock market. Thanks for watching this video. Stay tuned for more.